sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up guys, hope everyone is doing well. In today's video I'm going to be going over some updates for Bitcoin from the monthly to the daily, and then at the end I will touch on the total altcoin crypto market cap. But to go and get it started here, again just to quickly reiterate this chart here with these yellow arrows, what we're seeing here is a holding in on, a pinching in on the points of times in Bitcoin's history going all the way back to 2012, which is the basically a little bit into the first cycle of Bitcoin. And if you're new to the content or you're not familiar, the first two cards at the beginning of this video will have me, because I will likely throughout the rest of this video use the words phase and cycle with respect to how I personally see Bitcoin, going back and examining it and analyzing it from when it first began to trade. But those will have me more in depth elaborating on my specific idea of Bitcoin's projection. But anyways, each time we see this, we see the candles subsequently it will start to close above the black moving average, the slow DMA of the 350 DMA band indicator. Then once it starts to afterwards show strength, opening and then closing further above this each time, clearly as you can see in here, has denoted essentially the beginning of the upcoming or the next bull market. Here for this weekly chart, have not gone over this one before, but what we can see here clearly is an ascending with the black trend lines, a trend range, a very important one, which is denoted by the large amounts of bubbles on here, yellow and purple. Or I suppose you can also call this an ascending channel if you want as well, but it also goes all the way back to, you'd say it essentially begins at this point, November 2020, or 2013, not 2020. And what we see here is the upper trend line of this range, or this zone, is the basis, and then I just cloned that, took it down to the actual candle close of 2013. So if we were to fast forward from 2013 to September 2017, this is really when the major use case of this trend range, I suppose, really started to go into effect. We can see on here with the 10 bubbles, with our 10th one being our current one. Basically, we're waiting to see what's going to happen here. Really what all this is saying, which is really the only important thing right now, once candles start to close above on this weekly chart, close above and then continue to open above 32.5, the lower bound, but really 33,000 seems to be the staple here. Once we do that, we will either take the blue path or the pink path. The blue path is what I think and what I've been going over for quite some time. It's if we adhere to the structure I personally see, and I could very likely be wrong at the end of the day. If so, I happen to be right, then I think we're going to behave very approximately similar to how things behaved after the March crash. We've seen our build up, as you can see. It's related back to the beginning from March all the way to the first two purple bubbles. You take our second pairs of purple bubbles, and we are basically at that same point if you take it back and compare it to history. If that ends up happening, or the next most likely scenario that I see is an extended build-up period or consolidation, whatever. We can see the pink pattern finds the high at the very beginning of 2025, basically, or just in general 2025. I don't think whatever ends up happening personally, again, none of this is financial advice in this video, but I personally don't think that Bitcoin will, within the current macro structure that we're in right now, I don't think it will find its next macro, its next absolute top at anything past or later than 2025, end of 2025. I think whatever is coming next bullish wise, because the charts are clearly saying and pointing to these things, I don't think it will. I think it will happen either next year or 2025, 2024 or 2025. So if we take the pink pattern, basically what we would see here is we break 32 to 33,000, and then we go up and we get rejected at this white highlight. It is a very, obviously, going all the way back to basically January 2021 to when we got rejected in March of 2022 at approximately 48,000. It is the crux of the high range that we set when we really started to oscillate within this range back January of 2021, we were around when we first really hit 32,000. Again, kind of pointing out the large importance of this price, 32 to 33,000. And then from 32,000 really up to just an average of around 64,000 as we consolidated. We went from bouncing from bottom to top to bottom to top to bottom, and then finally got rejected right here at 48,000. So either we will come up, we'll hit that, get rejected into just any type of consolidation, I would believe, with healthy respect to this ascending trend range. And by healthy respect, I mean we won't significantly dump below it. Right here we can see we go down below the specific pink pattern, but I'm not counting that as significant. I'm saying we would basically have to lose this and then come down to at least 20,000 or anything below that. This pink pattern caters to the fact that the fourth halving is next year, likely in general first half of next year, likely March, April, or May. March, April, and May lines up with within this area right here that I encircled in black right there. So basically, the overall sentiment of this pink path is with, I suppose, more respect to the halving, but again, my whole idea of that is elaborated in terms of why I'm saying basically we're going to get a top with the halving instead of a bottom like we really have been for the last three. Again, that's elaborated in the second part of the two videos I mentioned earlier. But if we do end up doing that, though, I suppose, I mean, I guess it could be looked at as a good thing. There's more time to buy Bitcoin at cheaper and likely altcoins at cheaper as well. There's more time for you to catch medium term swings in price when you can get about like 50, 40, 30% instead of, obviously like 100 or really 500+% in a trade when the actual major bull runs typically begin. Then we would likely end up topping out higher. I mean, let's say we extend the bull market into 2025. I think we could possibly top out no higher than approximately 30 or 330,000, 350,000. But the last thing I wanted to point out on this chart was these white patterns you see down here at the bottom. They're meant to be inverse head and shoulders. The first one lines up right here. Our second one lines up right here. This left black pattern right here, my cursor, relates to the first two purple bubbles, and we can just compare these two right here. Basically, this one right here, so this upper black pattern, the smaller one, is our current down cycle we've seen from 30,000 the first time to the recent local low we set around 25.2 thousand. So essentially what we're seeing here is we've seen the down cycle of this little hook pattern right here, and again, like I said, now all we're really waiting on here to see is the significant break of 32.5 to 33,000, and then even further to make sure we don't get rejected into the pink path or some other similar longer consolidative path. We after 32 to 33,000, once we start to close and open above 45,000 on the weekly, I would really start to say and be more confident in this blue path, or in general just some sort of very, very quick parabolic bull market rather than a longer term one. So if we take a look here at the RSI, as I've been pointing out similarities between these two areas, denoted with the yellow trend lines, these bullish megaphone patterns, essentially, like you could call them. These, again, I have been saying since, I mean, probably at earliest around end of February, early March, which is where my cursor is currently, that this would likely end up forming like a bullish megaphone. We would end up making a lower low with this second one right here that we set in June. This has ended up happening. So again, this is also falling out very, very nicely as well. Again, it's obviously clearly within the upper range and the neutral range, around 52 to 71 on the RSI. Stock RSI is holding the upper region, which is good to see. As long as I continue to hold that, obviously, as we did back here, you can see for the previous bull market, everything will look good as well. Here an update on the MACD with Bollinger Bands, this symmetrical triangle we're pointing out for, out of everything I've gone over on this chart, I've been pointing this out and updating this every now and then for the longest. So far, everything is looking great. Again, just to get across the point, what we are basically seeing here is buildup of pressure like a spring. We're consolidating this MACD, this momentum, as it is a momentum indicator, is building up until we finally go buck wild and likely at this point head towards the upside. This being, I mean, if you even want to apply these types of patterns, some people may think this is a little wrong or odd at the end of the day to put this type of pattern on a MACD, but nonetheless, it's showing very, very symmetrical harmonics and progression of convergence towards, again, this 0 point right here, which everything is culminating on this 0 point. It's like the apex of the tornado again, eventually. Like I said, hopefully we'll break towards the upside here at the end of the day. But here on the, actually, I forgot, I'm going over the hourly. So I'm going from the monthly to the hourly, but here for this daily chart, what we can see here is, let's say, according to, again, so that blue path I went over, these white and black paths are two types of paths that are respective to the blue path. Either we're going to, like the black path, maybe sit sideways here for a little bit, or we will continue just to slowly straight upwards like the white path. But let's say if we get a minor retracement here, I'd say the first zone to look out for is 27.5 to 28.4 thousand approximately. If we start to lose that, then especially start to, on the daily, close and then open above or below, close and open below 26.2 thousand, then things could be getting pretty hairy or bad, I suppose. If we continue to extend this trend line range out there right here, I mean, we could totally come down to, I mean, really, I get a little drawer here real quick. I mean, we could totally come down right here to, I mean, around 24,000 again, heading into early July, which really isn't that much time for now. I mean, it's 25th of June to around maybe the 8th of July. It's not really that much time. It's about two to 3 weeks at this point, if that. We would just continue to further hit this descending support that's right here, which, I mean, I don't personally think that's most likely at this point, but I mean, that is a possible conclusion. So basically, and I guess not even really, so I'm going to forget what I was about to say. I mean, as I've been saying, I still think there's possible fair game. I don't think it's most likely, once more, that we could possibly, I mean, come down to as low as 23,000, even though we've seen a push to 30,000. Like I said, we have yet to really significantly close and then subsequently open, at least on the daily, above the rough areas where the candles were back in April when we first hit $30,000 approximately. So nothing's really confirmed. I mean, again, like I said, at the end of the day, we could totally end up seeing something like this. Maybe we come down to 24,000, and then we go below and get further rejected into, you know, as low as around 22.5, like I was mentioning. Overall, at the end of the day, that would still essentially correlate with the rough, you know, descending area that we've been hitting, going all the way back to early April of this year. But, you know, just to go ahead and entertain it, if we end up losing, actually, no, I'm not even going to say that, but like I've been saying recently, because I don't want to jabber on for no reason like I do half the time anyways, but 20,000 is basically the, like, make it or break it. If we lose that, I'm just going to sit here and wait for lower prices and just continue to buy. But again, I don't think that's really possible at all. And another thing I wanted to update was, as I've been saying recently, either there's like high 30,000s, like 37 to 44, 43,000 is where the next local high is going to be, or it'll be around 50 to 55,000. All of the price or the fractal patterns, the bar patterns, according to the blue path I went over earlier, all of them are lining up with high 40s, low 50s as the next major local area, which lines up with, according to what I have on here, towards, let's say, second half of July leading into second half of August. Second half of August being, clearly, as you can see with these patterns, when it starts to uptake in price again, which would then lead us into breaking this overall, the median of this macro ascending channel, going all the way back to the 2017 highs I went over in one of my most recent videos. But zoom back in here real quick to go over this RSI real quickly. We're not insanely oversold. We're obviously not as highly oversold as we were going back to January of this year when we first started to break out of this macro falling triangle. But nonetheless, we are rather oversold. So again, we could get that retest of around, most healthy, like I said, 27.5 to 28, really 27.5 to 28.5 thousand dollars approximately. You can see here we're towards the upper half of the RSI trend range. As long as we stay within this upper range and don't significantly deviate back towards the bottom, I don't think we'll see anything too prolonged towards the downside or, you know, essentially borderline sideways like we have been seeing. So here for this hour, this hourly breakdown. We can see here with the yellow trend lines and the 5-wave patterns that I'm pointing out. We could likely, if it ends up being correct with this ascending yellow trend support, we head into our 4th wave. If we look back at our previous 4th wave, obviously denoted by the ascending, not the ascending, but the vertical dotted lines, we could likely start to see, maybe we'll bottom out a little bit more. Maybe will lead into maybe, well, I forget this is the hourly chart, so this is really not going all over these higher time frames. I'm looking at this and I'm like, maybe it'll be about a week or so, but no. I mean, this could really start to break out towards the upside within the next, I would say, 12 hours. But once we start to, on this hourly chart, close and open above subsequently, really about 31.3 to 4,000 at this point, but lowest 31.2 thousand. I'll probably likely end up making another quick video just to show that it's potentially being a pretty good opportunity here. But to point out these moving averages on this lower time frame, the 50 EMA sits at 28.4, essentially 28.5 thousand, like I said. On that for recent daily chart, that's the upper bound. Again, here this yellow or this blue box. If we look at the 800 EMA, it sits at essentially 27.3 thousand again. So we have the 800 EMA and the 50 EMA, two very important SMA moving averages that I go over on this channel. Also on the hour chart, further validating the box right here on this daily chart that is more so correlated to the consolidation, stagnation of price in the past, where we could likely find that support. The final thing I feel like really strengthens this, in my opinion, is that we can see right here, get the highlighter back out. If I circle this area back here leading into 1, and then right here leading into 1, we kind of see this upper double top above the upper bound of the RSI at 74. Once we that culminates, we then trend all the way back to the bottom, and then we begin these boomerang or these L highlight shapes that we see on here. Again, also, I think that's very cool to see, and to me, really thinks that this is definitely possible. Given, I mean, obviously this, if I go back here, this blue projection, if this ends up being correct, then we're, like I've said in my last video, we're very likely basically going to be going straight up from here, if that ends up being correct. Best case scenario. So here for the total altcoin market cap, what we see on here, and I just saw this about, I don't know, 20-30 minutes ago before I started recording this video. Same pattern essentially here. It's a 9-wave move. We have, for the first one over here, we have an ascending neckline, and then for the second one over here to the right, we have a horizontal neckline. So we start up here in the top, high of 2018. When we go down, we have 1, 2, 3, 4, 5, 6, 7, 8, 9. Once we have 9, that's when we're below the neckline for the last time. Basically acts as the final local bottom of the bear market, the prior bear market consolidation or oscillation or whatever you will, until we break into the next bull market. We come to where we are currently, going to the high November 2021, around 1.7 trillion. We came down, we had 1, 2, 3, 4, 5, 6, 7, 8, 9. So again, this is also rather similar to the what I went over here for this weekly chart, where we're having this final point when we're below the trend range that I'm pointing out. We have this final hook-like down test, a very minor retracement before we really begin the brunt of bullish behavior. And then once we break that, everything really seems to go full steam ahead. On here, this lines up the horizontal neckline currently. Essentially 700 billion is what is important here. And the fact that this is really not seemingly moved up as much as Bitcoin has recently, comparatively, if I go back to the weekly here, we're up a lot more. This candle looks a lot more menacing or boisterous, and obviously bullish behavior than our, if I zoom in here real quick, you can see that our current candle is insanely thin-bodied with drastic wicks, which, as I've been saying recently, is a good thing given the macro sentiment of the market right now, factoring in the actual charts themselves and what's going on in the cultural, the socio-political sphere of everything that surrounds this market at the end of the day. This is likely going to and is indicating a momentum reversal where we'll start to head towards this 700 billion. Once we start to close and then subsequently open above 700 billion on the weekly chart here, and we'll see that as confirmation that if altcoins have kind of been lagging, performing lackluster, to Bitcoin pushing up towards high 30s at the lowest, or low 50s, mid 50s at the highest, then we'll start to see altcoins maybe start to lag 2 to 4, I mean, yeah, probably about 2 to 4 weeks, maybe. Not all of them, obviously. Some of them don't really lag as much, but generally altcoins lagging around 2 to 4 weeks behind, so basically half a month to a month behind Bitcoin. That also essentially lines up the median of the Gaussian channel as well. The upper bound of the Gaussian channel lines up at 775 billion, so I would also have that as a look at as well. Maybe there'll be some minor stagnation there, maybe there won't be at the end of the day. Take a look here. I don't have it as elaborated as I usually do, but if we just take here a look here, we can clearly see we've already come down to our most oversold territory that we need to get to. We just recently went the lowest in history, 16.62. Last time around it was 19.4. Now we have built back up into our healthy range, as we did similar to around August of 2019 to March of 2020. Now we're getting this final bounce, I believe, like I said, obviously factoring in how Bitcoin looks as well towards the upside. The stock RSI also looks good as well. I mean, we clearly see that we've started to get a little bit below the median line, getting into the very upper half of the lower range, which isn't necessarily a bad thing. I mean, we can totally just continue to, just trade like this, where we slightly deviate below, but as long as we just stay in the upper range, that's what we're going to see factor into the RSI, furthering towards the upside, and then ultimately, obviously, all of this is further derivative data of how the price is behaving at the end of the day. Take a look here at the MACD. We can see here how we started out very volatile. Since then, we got to the bear market bottom right here. We've been thinning out, converging upon zero. Eventually, at some point, in a similar fashion to that Bitcoin chart I went over, although this doesn't have a very nice, elegant symmetrical triangle, this is alluding to the fact we have had our swing low. We've swung back up. We are now seeing consolidation around the 0 point, which is the overall momentum area of seeing it flip into bearish mode or bullish mode. So once we flip that with strength again, that's all really just going to factor into, again, what really matters here is, just to reiterate, breaking above with strength 700 billion again for the entire altcoin market value, market cap. But that was really all that I wanted to go over in this video, so hopefully you guys enjoyed the content. Again, none of this is financial advice. It's just some random person over the internet going over what he sees in the charts and just feels like making videos about it. But at the end of the day, hopefully you take away something from this educationally, as really that's what my goal of this channel is to be. But all that being said, everything gone over, I hope you all have a blessed day.